Mr Deputy Speaker, I don't propose to speak for long today on this bill. Normally that gets me a round of applause, but apparently not today. Oh, thank you. The member for Whitlam has spoken eloquently, eruditely and, of course, incorrectly on most of what is in this bill, and we thank him for his contribution today. We do share with him, however, his desire to see these pieces of legislation passed as quickly as possible, and perhaps the Labor Party could assist the government by not moving amendments that are both unnecessary and unlikely to assist in helping the consumers for which they so often mourn. The unfair contract terms in insurance contracts is a recommendation from the Hayne Royal Commission. It was a recommendation proposed to that inquiry by ASIC. Just briefly, because the member for Whitlam has eruditely already summarised what's in those contract terms, what's proposed, is that the national unfair contract terms laws currently protect consumers and small businesses who purchase financial products and services through standard form contracts. Until now, insurance contracts, for very good reasons, Mr Deputy Speaker, have been exempt from the regulation by these laws. The Insurance Contracts Act will be amended, however, to allow the ASIC Act's unfair contracts laws to apply to all insurance contracts. This measure will offer protection to consumers who lack bargaining power and receive their contracts on a take-it-or-leave-it basis. These consumers are vulnerable to unfair terms like exclusions or onerous conditions which can be hidden in the contract. This will provide important protection in cases where an insurer has attempted to deny a claim or restrict the payout available to a consumer or small business on the basis of an unfair term. For insurance contracts, the regime will be tailored to increase clarity and certainty for industry and consumers. This includes defining the upfront price as premiums and excess or deductible payable, and defining the main subject matter of the contract as what is being insured. This is in line with the Royal Commission's recommendation 4.7. Consumers and ASIC will be able to apply to the court for a declaration that a term of an insurance contract is unfair. If they succeed, the term will be void and therefore will not be enforceable. Schedule 2, which specifically deals with the funeral expenses facilities and funeral insurance contracts. The Financial Services Royal Commission uncovered evidence of the significant harm caused to vulnerable consumers by the poor sales practices adopted by funeral expenses policy providers. The exemption in the Corporations Act that has allowed these providers to escape the scrutiny of the Australian Securities and Investment Commission will now be removed once this bill is passed into law. They will be subject to the Australian Financial Services licensing regime. The bill will ensure that consumer protection provisions in the ASIC Act apply to funeral expense policies, clarifying any ambiguity that may exist on this matter. The removal of this exemption will ensure that consumers have appropriate protection when taking out policies to help fund the costs associated with a funeral. The provision of prepaid funerals will be unaffected by these reforms on the grounds that they will be available to rely on the funeral benefit exemption in the Corporations Act. The bill will come into effect after royal assent. Providers of funeral expense policies that do not already hold an Australian Financial Services licence will be required to gain a licence by the 1st of April 2020. Schedule 3 deals with mortgage brokers. Prior to the election, I must say that I certainly found the recommendations from the Royal Commission on mortgage brokers to be somewhat contradictory. Labor, of course, backed these recommendations, but I'm glad to hear that the member for Whitlam is now saying that Labor agrees with our amended provisions here. So the Financial Reform Hayne Royal Commission Response Protecting Consumers 2019 Measure Bill 2019 fulfils the government's commitment to implement its response to 2 recommendations from the Royal Commission into misconduct in the banking, superannuation and financial services industry. The bill will introduce a best interest duty for mortgage brokers and reform mortgage broker remuneration. The regulations set out the details of the reform to remuneration. The best interest duty will require mortgage brokers to act in the best interests of consumers when providing credit assistance in relation to credit contracts. The obligation will bring into law and will bring the law into line with what consumers currently expect of mortgage brokers. The bill and regulations make changes to mortgage broker remuneration by requiring the value of upfront commissions to be linked to the amount drawn down by borrowers instead of the loan amount, banning campaign and volume-based commission and payments, and capping soft dollar benefits. The new rules will also limit the period over which commissions can be clawed back from aggregators and brokers to 2 years and prohibit the cost of clawbacks from being passed on to consumers. The Royal Commission identified evidence of mortgage brokers recommending loans based on the commission they would receive. Both the best interest duty and the reforms to mortgage broker remuneration will mitigate the incentive for mortgage brokers to suggest loans that are not in the best interests of consumers. Now, Mr Deputy Speaker, it would be remiss of me not to make some comments about these pieces of this piece of legislation. The first is that the evidence out of the Royal Commission is that banks have been using, in particular in its interim report, that banks have been using behavioural science to create a blizzard of products into the market, confusing consumers that give the appearance of competition without there being actual competition. We're seeing this in the superannuation sector as well. So increasingly, mortgage brokers and financial planners are becoming critical to Australians' financial well-being, both now and into the future, as we create a more complex financial system of which we should be rightly proud, whether it be in insurance, whether it be in superannuation and retirement incomes, or whether it just simply be in mortgage products to buy a house or to build an investment property. It is important that we avail all Australians, regardless of their income, with the capacity to get the most and the best form of advice that they can get, and not simply to reserve that advice to high net worth individuals and insiders who know where to go. And my problem is that with the Royal Commission, and it was that we may have the unintended consequence of creating yet more complexity while denying people capacity and the ability to reach out for that advice that they so sorely need at the time when they need it. The Hayne Royal Commission also pointed out a lot of anecdotal evidence of a lot of consumers being badly impacted by financial service companies and providers. What it failed to understand was that this parliament has already passed laws that those consumers and that ASIC could have used to both shut down and prosecute those providers who had done wrong by the consumers, and should have made the point and should have asked the question why those laws had not been invoked, rather than insisting that this parliament create yet more complexity to confuse yet more consumers, to deny yet more Australians capacity to understand and to seek the advice that they so need. We have now given ASIC enormous powers. We have cloaked it in great and immense capacity to do great good and great harm. We have provided it with more resources than it has ever had before. And yet they come back to this parliament and ask for more powers and more resources. We understand why on this side of the House, but we expect them to finally put an end to this. We expect less reports. We expect less lobbying, less communication, and less of them trying to impact this parliament, and more regulation, and for them to undertake their role in this, in what they do, in a manner and form that promotes competition and empowers consumers rather than reduces the choices that they have. The member for Watson is oft heard saying that this side of the House wishes to impose on unions laws that company directors would never have. However, when we have retorted that we are very happy to apply the corporations law to unions and to union leaders, he often falls silent on that idea that unions should be subjected to the corporations law. Because the truth is that company directors in this country now are very much on the hook for virtually anything that goes wrong and for any consumer that is harmed. Litigation funders run rampant through our legal system with billions of dollars, driving fear into the hearts of people who are simply trying to provide products and services to consumers so that they can be better off. These laws will ultimately protect consumers, but this parliament must be very careful that we do not introduce so many laws that we reduce the choice and the capacity for consumers to seek advice and to run their lives in a manner and form that they see fit, not in a manner and form that members of this House believe that they should. Thank you, Mr.